with a few traders. Let me ask you guys this. How many of you guys have not gotten, how many of you haven't got off to the start that you wish you would have this year? And how many of you guys is anybody frustrated because of that? Yeah. Okay, not really, I guess. So here's what's important to remember, right? This is 1 month. You've been trading for what? 3 weeks? 4 weeks? How many trading months are there in the year? Right? 12, 11, depending on if you're trading December or not. Don't panic. It is way too early to panic, right? Way too early to panic. If you go back through your back testing, look through those stats and ask yourself, have you ever had a down month? Have you ever had a down week, a down few week period? The chances are you have, right? There's no need to panic. And that's the biggest thing that gets traders into trouble is they don't get off to the start that they think or they want to. They panic, they start switching everything right away, and they end up dragging themselves down for the rest of the year, right? It is way too soon to make any type of drastic change. Stick to your plan, stick to your plan. I showed you guys this before. This was my 2017, right? 2017, a week by week, until I stopped tracking it when the whole TE situation when I made my mind up about the TE situation. But what do you guys notice for the first 6 weeks on this chart? I got hammered, right? I like this example because this was my worst drawdown aside from the period of time where I was blowing accounts left and right, right? Do you see what's in the first 6 weeks? It's a 17% drawdown, right? 4%, 12%, 14%, 15%, 70% went straight down. Now look to the far right of your screen. What do you guys see at the far right of your screen? And again, I think I ended about 30%. I'm missing a few weeks here because, again, I had zero interest in the syndicate anymore. 25%. I ended 30%. All right. Does the left side of your screen really matter? Is it about the start? No, it's about the finish. It's all about how you finish. You guys know I coach track and field. I tell this to our athletes all the time, right? No one wins the race in the first 10 meters. It's all about the finish line. All about the finish line. And I like this example because this is a good example of the reality of trading. The reality of trading is we're all going to hit drawdowns, right? We're going to be in drawdowns longer than we're in, for the majority of our trading. And I'll show you a little bit about that in a little bit. The fact of the matter is we never know when our drawdowns are going to come. We never know how long our drawdowns are going to last, and they come in very different forms. In this example, the majority of my drawdown, basically my entire drawdown for the year, came within the first 6 weeks, right? 70% in the first 6 weeks. There's another 5% drawdown between week 10 and 11. You can see there was a 3% drawdown between week 14 and I guess you could say a 5% drawdown between week 12 and 15, right? And then a little 1% drawdown between 24 and 25, but those are normal. The biggest drawdown came at the beginning of the year, and aside from that, it was a steady flow up. I've had years where I've started hot, and then I've hit 20-week drawdowns in the summer. 20 weeks, right? They come in all shapes and sizes, and we never know how they're going to come, right? Market conditions change. That affects how you're trading, especially if you're not trading a diverse portfolio of strategies. And all we can do is trust the plan. We can trust that we did enough back testing to see how our strategy performs over different market conditions. And we can look at those back testing results to get a realistic view of what trading is going to look like. I mean, look at your back testing results. Build equity curves, right? They go up and down. They ebb and flow. They ebb and flow. Now, panel says, well, this time I believe it had an effect on your psychology. Heck yeah. Dude, I wasn't panicking because I've been too consistently profitable to do that in the most humblest way possible. I know I'm going to be profitable at the end of the year. Again, at this point, I've seen it happen so many. I've seen the game played out so many different ways, and it always ends the same. The wife and I are watching this Netflix show called Russian Doll. It reminded me of that, where like they always die. They just die in different ways, right? So, I know the end game, if that makes sense. I know I'm going to be profitable. Now, I don't know how I'm going to get there. Another kind of analogy you can kind of make is like, you ever watch a sporting event, or like a sporting event on replay, or someone ever spoiled the end of a movie for you, where you kind of know that this character is going to die, you just don't know how. It's one of those type deals. But psychologically, yeah, it had a big effect, because I'm coming into the year, like many of you guys, I spend the winter working on myself, right? I spend the winter evaluating my trading year. I spend the winter doing some continued education, and after basically like a month off from trading, I get excited. I get fired up. I'm just like you. Hey, January is going to be a fresh start, right? Fresh start. I'm going to do better than last year. I'm fired up. I got new shiny toys to deal with. We're gonna get out to a great year. Woo! Yeah! Right? And I get all fired up, and then what happens? Boom! Slapped in the face to start. And I go through the same emotional pulls as you. And I think let me ask you guys this: what is the first thing that happens when you guys experience a drawdown? What is the first kind of emotion or mentality shift that you notice? Confidence. Does anybody start doubting themselves? Doubting their strategy, doubting their ability? Does this thing really work? I've been lied to. Yeah. The first thing I ask myself, and this is whenever I go through a drawdown, it's the only thing I ever question. I'm like, have I lost it? Like, have I lost the ability to read price? That's the first thing I ask myself. And I go back through it. I'm like, am I reading things the right way? Like, is that really a new structure high? Is that really an outside return? Whenever I'm in a bad drawdown, that's the first place I go to. Now, I don't stay there very long. And again, this is experience. I have the ability to kind of snap out of it and be like, Akil, you're good. Stop. And shut down those negative thoughts. But I can imagine as a younger, inexperienced trader, they sit with you a little bit longer. And the longer that drawdown persists, the more that self-doubt starts to take control. Panel says, now that I'm going through the back testing, I've started getting a bit neutral on trades. Good. But again, this is still back testing. Yeah, and that's going to help. Live trading is going to be different. Whenever there's money involved, it's going to be different, because that's a different emotional pull. It's a difference between playing a preseason game or a friendly and a game that matters, a World Cup final. But it helps. It helps. The thing that helps me when I'm in a drawdown is trade review, right? I want to go back through my trades, and I make this habit anyway of reviewing my trades. But more importantly, I want to go back to my trades, and I want to start judging myself on the goodness of my trades, not the outcome, because we already know the outcome. I want to start judging myself on the goodness, and that's your typical trade review of going back through your analysis, seeing if you missed anything, seeing if you could have done anything better. Were your stop losses in the right place? Were your targets in the right place? Did you enter for the right reasons? And just giving yourself a little graded system on, was this a grade A trade? Was this a good or a bad trade? And if it was a good trade, you have to look at that as a positive. You have to make that process more important than the outcome. You have to look at that as a positive. and saying that I did the right thing. I did the right thing. Excuse me. And Jason said, "This, by the way, this never ends. You just control it better." He says he still gets doubts and drawdowns. It just doesn't last. So Jason Greystone is saying that, hey guys, look, he's been doing this for a while now. He still gets these same feelings. The difference is he controls them better and doesn't act on them. Instead of panicking, right? Because he's gone through the process and he's put in a massive amount of work before trading live to prove to himself that what he's doing works, right? The numbers don't lie. They just don't last, or he doesn't make any significant changes. He trusts himself and he trusts his plan. More importantly, he trusts all of the hard work that he's done. Ray says, how often does this happen, Coach? I mean, you were doubting yourself. Not too often. Only during big drawdowns for me. So like this one was one. This 17% one was one. Because I questioned, I had made a few changes over the winter to my trading plan. And I'm typically emotionalist, just as a person in general. But I was really excited about starting the year. I had an okay year. 2016 was probably my biggest year of trading. I had like a 60% return that year. It was beyond what I expected. It was a massive year. And then this year, and the year before that, or no, 2015 was like a 60% return. 2016 was kind of back in my normal like 40% range. And, you know, emotionally, because I am human, I'm like, oh, I want to get back to that 60%. Like it wasn't a down year, but in a way I was like, man, I kind of got spoiled by that 60% return. I'm like, I got to get back to that 60%. So I was all excited, which is not normal. I was excited about trading again in January. And partially it's due to, you know, again, I don't typically trade in December. So I had taken like 4 weeks off, 3-4 weeks off. And I'm a trading nerd. I want to get back into markets. And so I questioned myself, like, was I kind of, was I over trading? Was I just excited and looking for positions? So I did question myself on that. But typically I don't doubt myself too much, only during big drawdowns or long drawdowns. So like this one, I did doubt myself. The one I told you about where it was like a 20-week drawdown, literally the entire summer, I did start doubting myself because it wasn't a bad drawdown, I just couldn't get the new equity highs. Which was tough. So only during the big ones, but maybe once a year max. Now, Naomi says, the greatest system, how do you form those? Just going through your rules, post-market and checking, you hit each one? Yeah. When I grade myself on trades, I look for a few things, right? Let me ask you guys first before I spoil it. If you're grading yourself on the execution, the process of your trade, what are some key factors you would grade yourself on? There's 3 main ones. If you're grading yourself on the execution, so if you took a good trade or not. An easy question is just like, did you follow your rules? Of course. But if you're grading yourself on a good trade, quote unquote, good trade or bad trade, what are a few sections you would grade yourself on? If you guys look on the spreadsheet, many of them are on the money management spreadsheet that we give you guys. I'll give you a clue. Okay, here's one. Entry. Right? Entry. Did you enter the right way? Yep. Were your stop loss in the correct place? Yep. Were your targets in the correct place? You can add a section for you guys that do trade management, right? Active trade management. That's one as well. You can also make one for general analysis. Right? And you have a 5-point gradient scale right there. But the main ones are going to be entry, stops, and targets, right? Did you enter the right way? Were your stops in the right place? Or entry, stops, targets, and active management. So did you enter the right way? Were your stops and targets in the right place? Active trade management is essentially, did you do anything wrong during the trade? Did you move targets? Did you move stops? Did you take stuff out early? Did you take stuff out late? Stuff like that. Or even more specific, did you trail the right way? So those are the four main pillars that you want to grade yourself on for a quality trade. And then, you can add overall analysis to it. That's going to depend on your trading strategy, however. But you can give yourself a score 1 out of 4, right? And then calculate that into an actual grade. If you're hitting all 4s, right? Or 3.5 out of 4, you're doing okay. If you're in the 2s or the 3s, I would say anything in the 3s, really anything under all 4s is imperfection. You want to be perfect, but we're human. We make mistakes. So anything under 3.5, I would say, is a problem. Give yourself a very small margin for error. Anything under 3.5 should be a problem. And that means that you may be sabotaging yourself. And Ray asks, psychology and emotion, is that involved in it? Oh, look at that guy. Look at that little guy. There you go. Psychology and emotion, that can go into the active trade management part. Now, you always want to track how you feel during a trade. I think that's important. But as far as like grading your trade execution, if you made a mistake due to psychology or emotion, then that's it.